Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. $69.99 for all of this here. Oh boy, what a steal! Good evening, everybody. How y'all doing, man? How y'all doing today? Hopefully y'all doing all right, man. It's Friday, man. It's Friday. How was y'all week? Was y'all week okay? Was y'all week all right? Check.
It was so.
It was so. Why was your week so? What you talking about? It was so.
It left room for improvement.
Sherman say, any day that you wake up and look into his pretty brown eyes, you know. Sherman say, any day you wake up and look at his pretty brown eyes, it's a good day, gal. Hey, man. Good evening to everybody that decides to tune in to Tim's Tidbits, man. If this is your first time, I want to say welcome. If it's not your first time, I still want to say welcome and give you a nice hearty of the heartiest thank yous for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just means big spot if you don't hablo Espanol. And like I say, you tune to another episode of Intraday Price Action Recap being brought to you by the Smart Money Manuscript. Y'all need to go ahead and cop that Smart Money Manuscript, man. It's almost Christmas time. I'm trying to put some presents under the tree, man. I need to sell some courses, man. $69.99, man. You're gonna help save a happy home. Y'all buy the course, I can afford to put some Christmas presents under the tree, man. Y'all know what they say. Those who can't trade teach. If you making so much money trading, why you selling the course? You that's what they say. So y'all got to help me out, man. Y'all got to go buy the course. y'all got to go buy the course, man. I'm trying to pay my bills out here in these cold Georgia streets, man. It was 33 degrees this morning when I was taking my son to school. 33 degrees. You know how cold 33 degrees is? Man, I had to go outside and warm up the truck and defrost the ice off the windshield, man. Cold out there, man. Cold in these mean city streets. Hey, man, Did price do anything? Oh, before we get into it, who we got in here, man? It's slack today. It's slack today. Everybody going. Everybody guess everybody hanging out getting grunk. Is everybody hanging out getting grunk tonight? Did everybody have a so-so week? So they hanging out at the hookah lounges, vape lounges, getting grunk and high. We got Deborah up here. Deborah ain't getting drunk tonight. She got an RN uniform on today. She being good today. We got Jim up in here. We got Here to Learn and Share up in here. And that's all the names I see. I see a few more numbers than I see names, but them all the names I see, so them all the names I'm gonna say. Hey, man, hey, that's all I can say. Did Price do anything today that caught you off guard? If Price did something today that caught you off guard, right? Raise your hand. Wherever you are, I see your hand up in the air. I see it. All you gotta do is raise your hand. I'll be like, hey, you in the back. What's your question? What you want to talk about? Then we say, hey, happy Friday, Lorraine. Lorraine, don't be rude. Say happy Friday to everybody. It's more people in here than me. It's more people in here than me, Lorraine. And somebody left the gate open because trouble just came in the back door. Somebody just let trouble in the back door.
Good afternoon, everybody.
Happy Friday, Rhonda Green. How you doing? How you doing? Let me turn on my doorbell so I can hear when Joker's trying to sneak in through the back door. Man, they done moved so much stuff around, man. Hey, let me do that. Where is it now? See, I done moved stuff and I don't. There it is, right there. Nope, that ain't it. I thought that was it. Yep, that's it. They done moved so much stuff around. There you go. Now I can hear when the Joker try to sneak in through the back door. What you want, Deborah?
You ain't got to say it like that.
I just saw you raise your hand. That's why I said, what you want?
Oh, I got a question.
Okay.
I know, and I'm not saying a crystal ball type deal, but I'm
Yes,
just
you are.
saying, no, I'm not.
Okay, I'm listening.
Just like when EQ was dropping, well, when the market was dropping, and after
Mm-hmm.
B had failed so far, you're like, is it gonna drop some more? Is it gonna reverse? I mean, is there any type of clues or signals or something that would leave way to say, okay, it's gonna drop some.
Okay. So what's your question? You want to know
Well,
what to look for to say if it's gonna keep dropping?
yeah, sort of. Or if it's
Okay.
gonna reverse.
So what
Or
you said sort of. So what's your question? I'm trying to figure out what you're asking here. You said sort of. Like what's like clarify it for me then. If that's what
um well, after it done drop and then it retrace some and you throw the fib up there and say, well, it's retracing the 50%. Maybe it's retracing to go lower. So my
okay.
question is, it might be some PD arrays I'm missing or some clues or signals or I don't know. It's something I might not be seeing. They help me trust or yeah.
You still ain't asked a question.
How can I trust it's gonna go lower?
How can you trust it's gonna go lower? Okay. That's part of the you're looking for clues, right?
Yeah.
You're looking for
Yes.
clues in price action. You talk about today in particular?
Yeah.
All right. Let me share my screen and let's talk about it, shall we? All right. So here's my screen. Are you seeing? Okay, there it is. Here's my screen. I'll leave y'all over there. Y'all can't see y'all, but I can see y'all. No, I'm not gonna leave y'all over there because y'all be blocking the stuff. I can't see around it. So I'll put y'all over here. Okay, here's my screen. So today, Zoom, this is an hourly chart. And today's price action started right here. It is red candle right there. This is where today's price action start. So let's put us a vertical line, one candle to the left of that. So everything that's going to be to the right of that dotted vertical line right there, that's today's price action. All right. So now the question at hand is, let's go to 15-minute candle so we can go straight to 9:30. 15-minute candles right here, right? And as you see, I still got my stuff on there from this morning, right? This is where we opened up at 9:30 right here. This is our opening range gap. Okay. Now, I got a lot going on the chart right now. Okay. But this is the type of stuff that you use to give you some type of inclination that we will continue the direction or reverse. I'm thinking that's what Deborah's asking. What do you look at to see if it is going to continue to fall or rally, no matter which way it's going, especially when it's moving such great distances, when it's just been in ranges. So, and he's just running, and you like, is it going to keep going? Can I trust that it's going to keep going? It's got to reverse. I don't want to try to chase the price. And if I chase the price and get my head busted and reverse it, I don't know what I'm going to do. We all been there. We've all been there, right? And for those who ain't seen me, I'm going to go full screen and show you what that looks like. Is it going to keep going? Is it going to reverse? Me understand. I just had to let y'all see it. Kill me. Okay, so got a lot going on the chart, right? So price opened up here at 9:30, pushed up, right? Then it dropped it like it's hot. Took a little pause, dropped it like it's hot. Took a little pause, right? Little retrace, then dropped it like it's hot, right? So clear bearish day after 9:30, right? Going into 9:30, not so much. We were in a sell program, right? But we wasn't really showing no desire to leave the middle of the range, right? So you really didn't know. I started above the middle of the daily range, got below, and then came back to the middle of the daily range, getting ready to go into 9:30. So it can go either way, right? And we talked about that on the pre-market analysis. If you was on the pre-market analysis, what did I say? Gun to the head was my bias and why. I said, gun to my head. This is my, like Michael like to say, gun to my head. This is my bias and why. Why did I say that? Who was on the pre-market today?
I was there. You saying we was like in the middle.
Yeah. And I said, gun to my head. This is what I think price is drawn toward. And why did I say that?
You actually said both ways because we was in the middle.
Oh my God. I said all of that, but I still said gun to my head.
Somebody come on in.
Who was on that as
well? Roll the footage back.
Roll the
okay, that's what I'm talking about.
It ain't no footage for the pre-market analysis
right there.
It ain't no beautiful bean footage for the pre-market analysis. Yolanda, Jim, I saw y'all in there this morning. Were y'all not paying attention?
Came in
I was
after
only
you had
there.
finished when you were talking about when you were discussing Apex with the young lady. So
okay, what'd you say, Jim?
I was only there for the last 5 minutes, so I missed it.
Who else was in there? Tish. What Tish at? Tish was the first one in there. What Tish still is Tish in here?
Based on your screenshot, though, you did say I would say you said we would be aiming for that sell side low,
Yes, the sell side. Yes.
low, and because we had set the relatively equal highs, and we trading away from it. So that's all I got.
I give 50%. Because I said that we're gonna get back to what I'm talking about with you, Deborah, right? I had said that we had set relative equal highs, we set relative equal lows, and we were in the middle of the road, right? So algorithmically, we could frame both ways. We could say we gap down, right? We gap down and failed to reach the upper quadrant and traded down to 50%, right? And then we can say for the bullish reason, we can say we came down, failed to reach the lower quadrant and are going back up to 50%. So either way it go, and we respecting the order block here, and we was respecting something over here. I can't remember what we talked about. Oh, the inversion fair value gap right there.
Yeah,
We had
that's what I said.
right. No, listen, right? So I said you can frame it both ways, but then I said, gun to my head, this is what I would be looking to be taken out. And the reason being is because we're in a sell program right now. I said if we were in a buy program, I would say gun to my head, this is where we're going. But since we're in the middle of the road and we're in a sell program, gun to my head, I'm looking for this to be taken out because we're in a sale program, right? Even though I could frame it both ways, I'm just sticking with what's going on now until proven wrong. Because I said, and if we come back and invalidate the sale program, then I'll start looking at the relative equal highs because we've done the same thing on both sides and we're right in the middle of the road and we're right in the middle of all of this accumulation right here, right? That's what I said. Gun to my head, sell side, reason being because we was in a sale program. Right? For all of those who don't be paying attention in class. Right? Now, back to what we was talking about with Deborah. Yeah, as y'all know, nothing is just this is the one thing you want to look at and end all be all. Okay. Now, you have a smorgasbord of things to help you out, right? When we go to we're gonna go up to the daily time frame first. Right. Well, let me go back to the 15-minute real quick. So, 15-minute time frame. I'm going to put a horizontal line right there where 9:30 is, and I'm gonna change it to a different color so that we can see it most expeditiously when we go up to this daily time frame. Right. So going into going into 9:30, price is where this blue line is. Right. So what does that mean? That means that as of now, going into 9:30, we're in a strong sale program, right? Because this is where we closed at the day before. And now we're down here, strong sale program, right? We're digging deep into this daily wick right there. Let me see if I can pop that daily wick on right there. Discount wick. Nope. I guess I don't have that wick. I don't have that wick marked out. Yeah, I never marked out that wick. Okay, we're deep into that wick right now. And our daily PD arrays, right, that we've been watching was this inversion fair value gap. And there was another SIBI up here that we never made it to. Right. Remember we talked about that other day. Y'all remember when we was talking about we was in between the tail of two cities? Right. Who remember that? While I find this. Who remember that? Somebody got to remember it. Right there.
Yeah, you said we were in a tail of two cities because we, like you said, we had the equal highs there.
Mm-hmm.
We had
No, I'm saying
liquidity.
when we was talking about this, we was
Oh
talking, we
yeah,
was like,
between those two
yeah,
civvies and an inversion. Yeah.
yeah, we were just consolidating there because we had a bearish fair value gap, inversion fair value gap, and we was just consolidating in between, right? We was in between the tail of two cities on a daily time frame, right? Accumulate. We said we're here accumulating, right? And because we talked about this, saying, okay, if we drop below, right, we want to see if this is going to turn into offset accumulation where we just rally higher, right? Because we was talking about we just accumulating, all right? So what we're watching is this inversion fair value gap, right? This is when price opening up. Remember, we're watching this inversion fair value gap, seeing if it's going to hold, okay? And that's on the support side, right? On the actual side, for lack of better terms, right? What do we have? We got this BISI that's still down there, because what we always talk about, we're buying the bullish PD arrays using the inversions and the old resistance PD arrays as confluence, as additional support, if you will, right? So we have the inversion we're watching, right? We got a wick here that you can watch, and we also have a BISI here. I chose to watch the BISI because we still have a portion of the BISI that had not been repriced to yet. And what do we say about liquidity that's resting inside of fair value gaps? That is tasty to the algorithm. It's chomping at the bit to get to it, right? So therefore, since we got this weekly low resting at a swing low that's inside a fair value gap, that's why I'm choosing to look at the BISI. But Tim, why you got it marked out like that? Because the quadrants is showing you the entire BISI, right? The entire imbalance, but the green box is showing you the portion that hasn't been repriced to yet. All right. Hasn't been repriced to yet. Now, that's our higher time frame areas to the downside where price could be drawing towards, right? And again, I ain't gonna say the most, right? The first thing that you're looking for as the draw is this weekly low, right? And why are we looking at that as the draw, right? We're looking at this right here as the draw because we poked above the weekly high, right? And then the opposite end of that range, right? Just like we look at a session, we look at a day, we look at an hour, anything we look at, if we manipulate one side of it, right? If taking out the opposing liquidity does not invalidate my buy program or sell program, that's my high probability draw on liquidity. Okay. That's why when we look at, we say when we reject this high, right? The most reasonable place is the low that sent us there, right? So we got a weekly high, right? This is the weekly low, right? So if we rejecting this high here on the weekly time frame, right, we're looking at the weekly low because this weekly low does not invalidate this buy program that we're in, right? If it would invalidate the buy program, then you would want to see these PD arrays hold up at all costs because you don't want to invalidate your buy or sell program just to sweep liquidity. Okay. This is all the stuff you have running through your mind. All right. We're going to get to what Deborah want to get to. Just walk with me. Right. So now we got our whole mindset put together, right? We're in a sell program. This right here is an ARP we've been watching for a while, right? This is the liquidity. That's the reasonable draw, right? Based off what price is doing since we manipulated the weekly high. So if this is the reasonable draw, right, I want to watch that PD array that's resting right there also, right? Because I want to see if this continues to hold, because we've been watching it already. We showed respect for it right here, right? And then now that we're coming back down still, right? We failed to go up and we're coming back down because this order block and this inversion fair value gap should have sent us back up, but now we're coming back down and we're here. So now I want to see if this is going to hold. If that doesn't hold, my draw is right there. Once I get to my draw, right, this is the PD array. I want to see how do we hold up. That's just my personal take on the PD array I'm looking at. You could look at the wick of the order block, right? You could look at whatever you want to look at, right? You can look at whatever you want to look at, but that's what I choose to look at there. All right. Now that we got our TDA out the way, let's go back down to the 15-minute time frame and get into the what I'm gonna do, because it's just moving super fast. All right. Now, okay. What time frame you be watching, like for your, like just watching it and then looking for an entry? What time frames you be watching?
Watch the 15 and I watch the 1
Okay, so
and sometimes the 5.
okay, so on the 15-minute time frame, what do you want to see on the 15-minute time frame before you start looking at the 1 minute or even the 5 minute? Or do you watch all of them like in conjunction?
I watch them at the same time.
Okay, but what do you want to see on the 15-minute before you start looking for an entry?
I want to see liquidity swept on one of the sides.
Okay, you want to see liquidity swept.
Or you know, or it
Okay.
go.
Yeah, you want to
Yeah.
see some liquidity hit before you
Yeah.
start looking at something. Okay. So you want to see liquidity hit before you start looking at something. All right. So
Mhm.
is it what liquid, like is it in a particular liquidity or is it any
Yeah. I look for pre-market high or low in either last session high or low.
All right. Okay. So today you're looking off the rip. Pre-market was hit immediately. Boom.
Mhm.
Right. Pre-market was hit immediately. And then prior session morning was hit at the same time prior day low was hit. This 10-15 candle took out both of those. That's prior session morning. I'm prior New York session, regular trading hour morning, and the daily low, right? Those was taken out. So this is a time when liquidity was hit, and this is a time when liquidity was hit. Okay. So off the rip, immediately you can be watching for something to transpire in here. Okay. Now, let's just say you don't trade before 10 o'clock and you're not looking at nothing in here. You just still waiting. All right. Here we go right here. This is our 10 o'clock candle right there. Right. So all of this here, you're not looking at anything yet because you don't trade before 10 o'clock, or this right here was still chopping around on you. And then we get the big drop. I'm jumping over to this because your question was, when it done went so far, how do you keep trusting it that it's going to keep going? Okay. Trying to fast forward a little bit. So here we go. That's our, how did I get over there? Get over here. All right. So now we know what all these crazy lines are, right? So right here at 10 o'clock, we drop down here and we trade down below the upper quadrant of the daily inversion fair value gap that we're looking at to see if we still use it for support, right? So we drop down here, we explore below the quadrant, right, with the wick. Then we come back and we close just below the quadrant right there, right? So now that we have engaged the pre-market there, right, and then now we come here to 10 o'clock and we drop down again, we still dropping below lows and we're not showing any opportunity to go to highs. So now at this point right here, now we're looking for bearish signatures, because now price is not showing a willingness to want to go back up. And when we look to the when we look to the far left, matter of fact, I'm just going to take this right here because we ain't using none of these up there. All right, we look to the far left and we see that we have some sell side, right, some internal sell side from yesterday's morning session, right? And then we have our AM low right there at consequent encroachment, right? That's the AM low right there. All right, so when we look over here, right, once we drop here, right, we've already engaged pre-market, right? We refuse to, I can move that big blue line now. Right? We drop down and we take out, boom, liquidity right there, right? We take out liquidity there, not showing the willingness to want to go back up, explore below the upper quadrant with the wick, and we close just below the upper quadrant of the daily inversion fair value gap. So now at this time right here, all right, that's when that candle closed. All right, that's when that candle closed there. So we're gonna go down to the lower time frame, looking at that area and price right there. Go down to the 1 minute there. You said 1 minute, right? And sometime to 5.
Yep. Mm-hmm.
All right. So looking at the 1 minute, okay. Remember we said we came, make this fatter sort of stand out. Right. We took out sell side. There's the AM sell side there at consequent encroachment, and then there's the daily low, right? And then further down here is the draw on liquidity. All right. So when we, let me find the start of that 10 o'clock candle. Right. That's 10 o'clock there. So everything to the right of that over to right here, that's the 10-15 candle right there. So from the edge of this box to that red candle there, that's our 10 o'clock candle, right? So this is the huge drop right here, right? That candle right there. All of that right there is the huge drop. So now we're trying to figure out what in the world happened. What happened? Where did my stuff go? Come on, man. Am I tweaking? Okay. Boom. Now, so we're trying to figure out when price dropped right here on this huge drop, right? We stopped right there. We've taken out the internal sell side, and this is the morning. The morning to make the morning thicker too. Right. So that's the morning, the AM sell side from yesterday. And put it on the bottom. Right. I'm gonna hide this daily fair value gap because it's too much stuff over there. We can't really read it. I still got the quadrants in there. And it's resting right there by the daily low. Okay. Just trying to make it a little bit cleaner for everybody to be able to see. Okay. Now, you ask yourself, how can I trust it? Right. You want to, as prices printing, since you're looking at all of them simultaneously, right? You can do it in real time. But if you're watching the 15-minute, and then once this 15-minute candle closes, because now it's engaged liquidity, and now you're watching the 1 minute, now the stuff that you could have seen in real time, this is what you got to glance at really quickly and see once you drop down. Meaning, right? We offer buy side and sell side delivery, then we left that range, right? So now here from the upper quadrant of, I don't have the names on that. That's why we putting names on stuff. Let me see what this is, the upper quadrant of. Oh, that's my daily range. Okay, that's my daily range. I don't have the name on that. Got to find the middle now. Sorry, y'all. I be needing this stuff to make sense in my mind. It's the lower quadrant. I said upper quadrant before, but that's the lower quadrant. And then I'm going to hide the top and the bottom because they overlap with stuff that don't need to overlap with. Okay. All right. So I don't need this pre-market. I can hide that. I'm just trying to clean this up. Trying to clean up all this stuff I don't need. Make everything legible. I just want the important stuff on there. Okay. Oh, those are the quadrants for that daily sippy. All right. The one that was looking for the support. Oh my goodness, where's the middle of this thing at? Oh my God. I'm sorry, y'all. Y'all know I got to get this right so I don't drive myself crazy when I'm trying to figure out what these lines are. Bye-bye. Somebody just left. Taking too long for somebody. Take too long for somebody. They couldn't take it no more. They left. They left. They left me. Who left me? Who that was left me? Somebody left me. My feelings hurt now. My feelings hurt now.
They might stay in Columbus, Georgia, and just got bad Wi-Fi. You know what I'm saying? Ain't no good gillionaires out there.
Hey, when I get my feelings get hurt now. Y'all know what happened. My feelings get hurt now. All right. Now that I got everything marked so I can understand what it is, okay, back to what I was saying. We this big drop right here, trying to figure out how can I trust it? Are we gonna keep going down? We've been selling down all this time, right? And we always talk about not chasing price. So how can I trust it? Right? The signatures that you will be seeing in real time, if you're watching all the levels at the same time, you'll see that we offer buy side and sell side here, and then we left the area. So we're looking at this stuff up here as a balanced price range because we already left past that right there. So we're looking at all of this as a pretty much everything above the lower quadrant of the daily range. We're looking at that as a balanced price range. So we don't want to see price digging back above this upper quadrant right there based off the fact that it's a balanced price range. So in the middle of this 15-minute candle, right? So here at 10:04, right? So at 10:04, we start leaving at this area here. So at 10:04 coming down, once that candle there closes, now we do not want to see price digging back up into here because this is a balanced price range now, right? So that's one thing we're looking at as prices printing, like watching the 15 and the 1 minute at the same time. Okay, then we come here and we create a SIBI right there, right? We create a SIBI right there. We trade back up into that SIBI, right? So when we leave, right, when we leave this area and that candle closes, now we don't want to see price coming back up. So we're watching from here when it leaves. This is the candle when we're leaving that area. So we're watching it. We coming down. Boom. We come. This next candle comes down and it forms a SIBI. Boom. Right now it comes back up to the premium of this little piece right here into that SIBI. Right. It's respecting that lower quadrant. Where is this SIBI created? That SIBI is created right there on that quadrant level. Okay, trades back up into that SIBI and then it drops down. Boom, right? It drops again, taking out the liquidity. All right, so we take out the liquidity. When we take out the liquidity right here, right, we create another SIBI right there. So we created a SIBI there, traded up into it, dropped down, created another SIBI and another SIBI there. Right. So we got back-to-back SIBIs there. Right. So now at this point, right, since we got back-to-back SIBIs, right, you want this SIBI to stay open. Right. You don't want it to, you really don't want it to touch it at all, but you don't want anything closing above consequent encroachment of that SIBI. You want that to be a breakaway gap. Right? You want that to be a breakaway gap here. Right? So you're looking for this to be a breakaway gap. All right. Then we come down, we create another SIBI here. And then where are we creating this SIBI in reference to how we're moving right here? Right? Because remember, we traded up into that and we dropped again. So since we went back up to a premium of this little move down there, now we're looking from that high down to that low right there. We created this SIBI, right? It's right up the top of it is around equilibrium, but it's pretty much in the discount of the move, right? So we're not super hype about selling this, but we don't want to see this getting a closure back. We want this to act as a breakaway gap, right? So don't touch that all, or don't give me no, don't reprice the whole thing, and definitely don't give me no body closures above consequent encroachment. All right. So we trade back up and we fail to get the consequent, come very close to consequent encroachment. Then we start moving back down. All right. And here's a very important signature that a lot of people miss, right? When we come down and take out this liquidity right here, right? As we came through this area here and took out this liquidity, right? This right here was the first imbalance that was created before we went and took this liquidity, right? So we're not looking at this as a high probability inversion fair value gap if we get a closure above it, right? So we getting this closure above equilibrium, getting this closure very close to the high of it, right? All the bodies are still staying inside it, but we're not looking for this to act as an inversion fair value gap that we can buy off of, right? Because we're bearish and we got a SIBI here that we want to see act as a breakaway gap. Not only that,
Whoa, before you go further, what about the CB right above that,
right here,
where right below the balance price range
here,
yeah. What about that one?
we traded into that. You weren't
Uh,
here when I just said that.
yeah, but it's still there.
But I'm saying we are, let me say it again. All right. So we left our balanced price range, right? We left our balanced price range. So now we don't want to see price, right? Once this candle closed, we don't want to see price coming back. We don't want to see price coming back above here or digging up in there, right? So then the next candle we come down and we make a SIBI. This candle here, right? We go up into the SIBI and then we displace away again, creating another SIBI with this drop as we go into that right there, right? So since what we're doing, we have just extended this all the way down right there, right? All we're doing is extending this range right here. Okay. All we're doing is extending this range. We're just extending this down further and further and further. Okay.
Mm-hmm.
Now we've traded back up into a premium of this move. So there's no reason for price to go back up there now, right? We've come back up and we've offered an opportunity because this is our fair value gap. So we came back up and offered an opportunity for smart money to get short because we didn't offer any sell side delivery here. I mean, any buy side delivery here. So we come back and offer some buy side institutional order flow entry drill and we get out of there. That's a good signature of heaviness. Okay.
Okay.
Now
Okay.
we create another SIBI and we create another SIBI, right? These, like we've already offered the buy side delivery up here. This is the only place, and this is the only place we haven't offered buy side delivery yet as we're coming down here, right? So, and then as we come back up, right, we're offering buy side delivery to this right here. We're wanting this to remain a breakaway gap. Why? Because we created two SIBIs back to back. When you create two fair value gaps back to back like that, you want that higher one to act as a breakaway gap because the algorithm is showing you I'm moving with a purpose. I'm really displacing. So it's making back-to-back gaps and low resistance liquidity runs. You don't want to see it coming all the way back up and repricing this whole thing, right? So when we come back up here, right?
Now I got a question about that, Tim. I don't mean to stop you. When after this is formed right there, that makes that other SIBI reclaim.
After
Balance
this is
price
formed,
range?
Yeah, after the next one is formed,
after
after
this
the
one here,
next, yeah, after that candle is
n-
formed and makes that busy,
n-
this one
n-
becomes a reclaim
no, if we get back up here, then this right here would be an inversion,
inversion.
right?
Okay,
Yeah,
inversion.
this would be an inversion if we closed up here. But since we're not closing up there, then it's just a
The
civvy and a
SIBI.
bissy,
Okay. Oh,
right?
so a
Quick
candle got to
question.
close. All right.
Yeah, the counter got to close up here to make it an inversion.
All right, go
And
ahead,
is that a
Jada.
balance? Oh, sorry.
Is
Go
what?
ahead.
Go ahead.
Is what? Is what?
She was sa- she was saying, was that a balanced price range? The
In
two, the
here,
red and yeah,
once we leave it, right? Once we
once we
leave
leave
this
it.
area, this would be a
Oh,
balanced price range because we've offered buy side and sell side delivery in there, right? Until we leave the range, it's not a balanced price range. It's just efficiently delivered.
well, getting confused was I was marking the SIBI and the OP with the other BISI to create a BPR there.
You say you marking the well in the case
You know
of
where your
in
SIBI
the
and your
in
BISI
yes
interact?
in the case of this right here, yes, with
Yes.
overlapping fair value gaps, yes, that's a balanced price range in between those two. But this whole area right here, until we leave that area, this whole area is just efficiently delivered, right?
I
The
see.
and see this, just those two there alone, yes, that's a balanced price range in itself. But you're thinking about, why am I looking at this to be used as a balanced price range?
Oh, okay.
You see what I'm saying? It's like, because we don't want to, you're not looking for everything everywhere, right? You're looking for it.
Sure.
You can identify it, but if it doesn't need to be used in support of the narrative,
The narrative.
then
Yeah.
yeah, you just
That's where I get lost, seeing too much.
yeah, you just got to
Okay.
you want to pick out to pick out the things that's important to the narrative right now, supports the buy or sell program. Okay. And so
Thanks.
when we so now we come back up here, right, into a premium, right? You come into a premium of the entire move, and you coming into a premium from since the last time we traded back up to a premium, right? So you're coming back up to the premium, right? And then we're starting to come down. And back what I was saying when I was like, some things that people miss, right? This right here, that SIBI there, right? We're closing up here, kind of disrespecting it, right? But this is not what we're looking for to become an inversion fair value gap, because this is the first one in the move, right? If this was the first one in the move down that took liquidity, then you'd be like, okay, this can possibly become an inversion fair value gap. I got to watch that. But since it's not, you're not looking for that to be an inversion, right? And then when we create this SIBI, this BISI right here, right? When we move up here, this BISI is in the discount of that move. So if price is bullish off of this sweep of liquidity, we shouldn't come right back and create an inversion like that, right? So, and that's what I was saying. These are the little signatures that you're looking at while price is printing. Like when you're watching the 15-minute time frame, right? And this bit counter just look like this, and you're looking at the 1 minute at the same time. This is the stuff you're seeing inside of that big candle as it's coming down. You're seeing that right there coming down. You're seeing this right here. You know what I'm saying? And then once all of that forms, now you're like, okay, we have, right? We've come down. We've taken that liquidity, right? I saw this. I saw this. I saw this. Those are the things you're looking at to say, okay, price is still looking heavy. Price is still in a sale program. So let me get back to where I
Another
was.
question, was that a second breakaway gap, the very first one? Since they were like two gaps and then the balance price range?
Talk about here,
The top one, the one above the, yes,
right here,
there's another fair value, there's another
right here,
CB.
right there.
Yeah. Oh, it's
I mean,
too small.
you got
Yes.
you got a breakaway gap there. You got your SIBI there that you trade into. So you got a breakaway gap here. You got the SIBI you traded into there, right? We want this to act as a breakaway gap, and it did. Even though we traded up inside of it, it still acted as a breakaway gap because we didn't reprice the whole thing. This right here is acting as a breakaway gap because we didn't reprice the whole thing, right?
Okay.
So it's like when we get in that momentum, leaving an area like that, and we don't reprice that imbalance, right? Is acting as a breakaway gap, right? And the stronger
Okay.
breakaway gaps are going to be the ones that don't get touched at all or get the institutional order flow entry drill, right? So
Okay.
you're looking for that breakaway gap when you're coming out of an area of consolidation. When you're just sitting there accumulating and you break out of there, you want to see that first imbalance act as a breakaway gap, especially if we create another one right behind it. You know what I'm saying? If we create another one
Yeah.
right behind it, then we really wanted to act as a breakaway gap then. Even if it's the one by itself, we still want to see it act as a breakaway gap, right? Because this is the first time we're leaving. So we don't want that repriced. We don't want it refilled.
At
We
all.
want to see it act like, and then boop, we get an institutional order flow entry trail and we go, right? And so once we come
Okay.
down here and we've taken liquidity, right, we get a little bit deeper pushback than I really would want to see inside of this breakaway gap. And, you know, that's par for the course. You're coming into liquidity, right? You're coming into a quadrant level. We're coming into the upper quadrant level on the daily SIBI that we're looking to act that if it's going to act as support, right? That's that level. Because remember, that's the SIBI we're watching there, right there. Oh, hold on. Sorry about that. I got a text message. So I can't remember what I was about to say, but right now we was here. We said price came up. This right here was in the discount of the move, right? We trade up here, then we come right back and create an inversion fair value gap right there, right? That's bearish. There, we're right there at that quadrant, right there. Okay, excuse me. Where is that inversion fair value gap resting? Right there on that upper quadrant. Remember I sent out the screenshot today? When I sent the screenshot, or remember when I
Yeah.
on the screenshot, right? When I say also there just happened to be an amazing short opportunity at the upper quadrant of that magical red rectangle of my charts. Right? Remember that amazing that wait a minute, what did I do? Remember that amazing shorting opportunity? Well, I say the upper quadrant of that magical red box. That's the magical red box. That's the upper quadrant. That's the amazing shorting opportunity right there. We got an inversion fair value gap in line with that quadrant with a SIBI that's in line with that quadrant. So that gives us a balanced price range that's in line with that quadrant, right? And now we're leaving this area, right? And then we trade back up into it. Right, we come down here, right? Set relative equal lows, stop, right? Trade back up into the inversion fair value gap, right? and we push all the way back up, right, into the order block, just to add insult to injury, right? But look at the bodies, right? Look where all the bodies are respected, that right there, right? We just got this long overlapping wick there just to add insult to injury, right? So amazing shorting opportunity there, right? Right here, right? So we looked at all these signatures here that was saying, right, we're bearish, we're bearish, we're bearish, right? This right here is where you hear me say, let price form new structure that you can trust, right? If you're not keen enough to trust this right here, based off of, okay, we are forming stuff at a quad, because remember, the quadrants is our roadmap to where stuff is going to be, high probability setups are going to form, right? If you're not keen enough to trust this right here at that quadrant, what is price doing right here? Price is forming new structure, right? So when price forms this new structure right here, what do? We leave that area and close outside of it. Right here, we're leaving here, but we don't close outside of it, right? But I'm taking this as we're leaving this area now, because we're coming down into this rejection block and we're closing down there inside the rejection block. So I'm trusting this move below these equal bodies based off the fact that we have all of this resistance right there. Based, like I said, we created a BISI that we immediately created an inversion off of, and now we're dropping down, and now I'm just looking for us to trade back up into that BISI. I mean, that inversion, yeah, fair value gap, trade back up into this reclaimed fair value gap, and then keep it going, right? And this is a reclaimed fair value gap because we went back above it, then we came back down and closed back below it, and now we're trading back up into it again, right? So we trading it. We trading into the reclaimed fair value gap. We trading into the inversion fair value gap, and then we're leaving that area. So now, right, we have a balanced price range here. Right now, we just created new structure. We just created new structure that you can trust now, because this is our daily low right there. That is our pre-market low there, and our draw on liquidity is down here. So now price has just formed new structure that I can start trying to participate off of without worrying about chasing price, because it's done everything it needs to do up until this point, right? We've revisited the premium there. We've revisited the premium there. We've created a balanced price range, and we've left that area. So price should not trade back above there anymore. Okay. So then, right, if you didn't trust any of this, right, if you didn't trust any of that right there, if we look right there, right, when we said that first imbalance, when you're leaving a balanced price range, we want to see that act as a breakaway gap, right? We come up there and get a beautiful institutional order flow entry drill right there, right, inside that gap, and boom, drop down into the daily low right there, right? So you had one opportunity at the quadrant level, then you had a second opportunity right there after leaving the balanced price range to take us down into the daily low, right, into those relative equal lows that we had talked about as gun to my head. This is where I anticipate price drawing to today, right? And then we even got the deeper dig down into there, right? So that's just, you know what I'm saying? It ain't no hard fast. This the one way you can do it. The only thing you can do is when price is moving, is looking for the signatures, right? And when I don't know if you was on the other day, or because I repeated it last night also, or whenever it was, you want to wait until price offers something. If it's not offering anything, meaning it's not showing you a signature that says, oh, I know what that is. Since price is doing this, then it should do that, right? Just like here, all it's doing is going back and forth here. It ain't give you nothing, right? But as soon as we leave that area right there and then create that fair value gap there, oh, we just left that area. It shouldn't come back up there. Oh, we just created a fair value gap. We should hit that and go down, right? You see a signature that say, if price does this, then it should do that, right? You're always looking for that. When price is just chopping, and it ain't giving you nothing that sticks out like, oh, I know what that is, right? It ain't nothing you want. But as soon as you see a signature, you want to watch and it say, okay, now since price did this, then it should do that, okay? And then when you see here, when we came back here after we've taken out, right, we've traded down and took out the daily sell side, right? We trade back up into that imbalance. Then we drop down, right? We go below the lower quad. This is the lower quadrant of the daily fair value gap. And we come all the way down and fall just short of the low, right? We fall just short of the low of the daily fair value gap. Now, mind you, when we came down to the lower quadrant, we didn't reject the lower quadrant. We pushed all the way through it and came just about to the low, right? So then when we came back up here, right, we came back up and we used it as support and went right back up to the consequent encroachment, right? What do we typically look at when we look at these quadrants, right? We watch how price will stair step in between these quadrants, right? Going to where it needs to go. Okay. So when we look here, we came down, we didn't reject this, we pushed through it, showing a desire to want to keep going down at least to the low, right? We didn't touch the low. We stopped right there at the low. So since we stopped right there at the low, then I'm pretty sure it's a relative equal low over there somewhere because it's the low of a fair value gap, right? It's something over there that's relatively equal to that, right? We ain't going to look over there. We just already know based off how the PD res form, right? So then we come back up here, right? We create an inversion, but then we automatically trade back down below it, right? That's not showing a desire to want to reverse, right? Because we create the inversion, right? That's the first SIBI that's created before we drop down, right? We're already below the sell side, right? We're below the sell side. You know, that's the sell side we're looking at. We're below the daily sell side. We're below the relative equal lows, but we're not using, right, this PD array that's aligned with that quadrant. We're not using it to spring up higher. We immediately disrespect it, right? That's showing a sign of, okay, we're just hearing some kind of consolidation, right? Because we did not use that SIB because we know, hey, look, we got a SIBI, right? It's in the premium of the move and we created an inversion, right? So now since it created an inversion, if price is truly bullish, we should use that as support. But since we're in a sell program, we're not looking for reasons to buy, right? We're not looking for reasons to buy right now because we're in a sell program. We haven't invalidated the sell program, okay? Right? So when we come here, we create an inversion, right? So we should, and we come back and immediately disrespect it. So now we say, okay, price is still bearish, right? And so we see here, we go into a holding pattern, okay? Now that we go into this holding pattern right here, right? Price is still bearish. And when we start to leave this area right here, right? We start to leave this area right there. Now we come back up. We're coming back to, right, our breaking structure. We're coming back to our quadrant. Remember, we explored below the 25 and now we've come back to the 50, right? So we came close to the low, consolidated at the 25, and now we've come back to the 50. When we coming out of this consolidation right here, right here, we get an immediate rebalance, right? Then we trade down, right? And then we hit, once we hit this SIBI right here, we immediately turn back around, right? This immediate rebalance there, if it was truly bullish, should send us up, right? But we came up and we immediately turned back around. That's letting you know that's not an immediate rebalance, okay? Then we come over here, we pop up there at 848, we pop above this high right there, and when we go into the macro time, we go up, can't take out that high, then we drop down, create a fair value gap right there, right? Because we click trading outside of this little consolidation area right there. So we got a fair value gap right there that we don't touch at all, right? Breakaway gap, right? We create the fair value gap there and we come back up, don't touch it at all, breakaway gap, right? Then we displace down again, right? Creating a fair value gap right here, right? Giving us a breaking market structure right there, right? Trade back up into that SIBI, boom, drop again, right? So all of it, we've created structure, right? That you can trust, right? We've created structure that you can trust, right? By coming down, not using this as an inversion to send us higher, right? By popping back up into this SIBI that's created in line with that quadrant level, right? With that quadrant level, what are we doing? We're defending the upper half. Remember when we're looking at fair value gaps, whenever we're watching fair value gaps, right? What do we want to see price doing? We want to see price defending the upper half. If it's a bearish fair value gap, right? We want to see it defending from consequent encroachment up, right? And look at that, you don't have, this is the highest closed body right there, right? Nobody's even getting in the upper quadrant, right? That's exceedingly bearish, okay? Defending that beautifully. Drop down, right? Breakaway gap, breaking market structure right there, right? There's your SIBI right there to sell off of. You built more structure that you can trust, right? And there's your SIBI that you can sell off of right there, right? And that takes us down into the weekly low. Okay. And that's also, if I'm not mistaken, right there. Come over to there. Yes. Right. That's also inside a macro window. Right there. That's also inside that macro window right there.
Right. Return of the MAC. Yeah. Mm-hmm.
That micro, it's inside that micro window right there, and it delivered down to the thing. And we're extremely extended, especially from what we started on the day. But right, you just look at the different signatures of create a structure you can trust, right? Coming down, create a structure you can trust, coming down, right? And then now here, when you notice there, right, I have this sell side liquidity mark there, right? This is our weekly low, right? We got sell side liquidity there. We got the lower quadrant of that BISI, right? And all of that. And once we took that sell side, we poked just below it, right? We poked just below that sell side right there. And then in that lower quadrant, and then price started to move back up, right? It started coming back up, and we came all the way back up to the lower quadrant of the SIBI, right? We came down to the lower quadrant of the BISI and traded all the way back up here to the lower quadrant of the SIBI. And then we started to come back down again, right? And ended the day right around here somewhere, right? So hopefully that makes sense. There's no hard fast rule of, oh, you can trust it because it is. Oh, no, it's the same thing I always say. Let it form structure that you can trust, then look for reasons to participate in the short or the long. Makes sense?
Makes sense. Yeah.
Oh yeah, Tim, it's real clear when you be talking about it.
God knows. Jesus.
It's real clear when you be talking about it. Let's look and see what the week look like. Where's my and then we're gonna go. That's all I got. I'm just looking to see how the week look real quick on the lower time frame. And then so I ain't got nothing else. If anybody got any questions or whatever, y'all free to go. If not, okay. So that's our Monday, Tuesday, Wednesday, Thursday, Friday. Okay, these are all our days there, right? It's a 60-minute chart here. So we opened the week here, went up, set relative equal highs there. Okay. Make that green so it makes sense in my mind. All right. So we opened the week up here, traded up, set relative equal highs, came down, took out short-term sell side, consolidated a little bit, took out that sell side, right? Consolidated a little bit, took out that sell side, ratted up, took out the relative equal highs that we created. Right. We took out the relative equal highs, dropped down, took out the sell side. Again, right? All the sell side there plus this, right? That was the sell side I was talking about a while back when I was like, I want to see some more meaningful sell side taken out. That's the sell side there, because I was saying we had formed all this sell side here, right? So we came down, took out that more meaningful sell side, right? And we came up and then we engineered relative equal lows. All right. Engineered relative equal lows. Okay. Now, once we came up, engineered relative equal lows, we ratted up and engineered relative equal highs. Then we came back down and took out those relative equal lows on today. All right. So when you zoom out and look at the week as a whole, right, you can see the algorithm engineering liquidity, taking it out, engineering liquidity, taking it out, right? We engineered liquidity here, right? On the let's do this, see if we can put it into the aspect of days. Can I do this? Let me see here. Let's go. Did you eat what Chris would talk about? No, I didn't. Why, what's up? I think I want to kick a chicken. You want to eat some chicken? I think we eat some chicken. Boy, stop. You gonna go get some Zaxby's? Yeah. You flying or you buying? Which one? I said, you flying or you buying? I can buy. Okay. Oh, you gonna fly and buy? Oh no, I'm gonna go up there right now. I kind of need gas too. All right, like I have been thinking about it all day. Like, you ever have a taste in your mouth, like something? Get me one. Get me a kicking chicken meal too. Cherry coke. Yeah, with cherry coke. Yeah, kicking chicken meal with a cherry coke. Let me see if I can put this in the let me see. So it don't just be one big blob. Maybe I'll try to stop it. Oh, I'll do this. Maybe I'll try to stop. Let me see. midnight 19. I put 16, so 19, 18, 1800, and then I'll go until 9, no, 30, 40, 50, 60, 14, 15, 16. Let's try that. Okay. All right. Okay. Well, it took it out of me just then, but I tell you. So we got Monday, Tuesday, Wednesday, Thursday, Friday. All right. So on Monday, we came up, set relative equal highs, right? Then dropped down, took out short-term sell side. Right. Tuesday, we dropped down, took out sell side, right? And came back up, took out buy side right there. So set relative equal highs, came down, made a low, taking out sell side, traded back up to a premium on Tuesday, dropped down, took out sell side, and came back up, took out buy side. Right. So set relative equal highs, made a low, took out sell side, and then took out buy side, setting up a possible reversal, right? So we went liquidity to liquidity, right? Possible reversal. Came here on Monday, Tuesday, Wednesday, right? Wednesday, we took out buy side right there, dropped down, took out sell side, and then rallied all the way back up and took out the buy side. So we had a wig snatcher here without an opportunity to participate on this hourly time frame that we're looking at here, right? So Wednesday, we got the wig snatcher, buy side, sell side, buy side, but we didn't get an opportunity to participate into the relative equal highs. Okay. And we're just looking at it by day. So once we got the wig snatcher there, right, took that out. Then Thursday, we come back down, right, take out all of this sell side there, including all of this. Okay. Trade back up to a premium, right, into the inversion fair value gap, trade back down, engineer relative equal lows, right? Once we engineer the relative equal lows, rally all the way back up, right? Engineer relative equal highs. And then Friday, we come in and we take out the relative equal lows that we had engineered and came all the way down into the weekly low. And the weekly low was somewhere around here. What was that weekly low? There, the weekly low was there. Came into the weekly low and then a little bit lower. That's the other sell side liquidity that I had marked out right there, right? Besides the weekly low, because I'm always looking like how far can we go beyond the low. So that's the liquidity there I was looking at, because the next swing low or the next liquidity I was looking at was way down here, right? So, and that's way farther than I would want price to be moving right now to stay bullish. Okay. Not saying it can't, but just for the sense of want to stay bullish, that's way farther than I want to go, because we're trade right here. That brings us right back down into this whole balanced price range right here. Okay. So yeah, that's just a glance at it. Go ahead.
Okay. Where we are now, it's like we're on top of that balanced price range over there to the left, right? On the 1 hour. Cause okay, on top of that, yeah. Okay, gotcha. So we don't want price to go down there.
No, because right, We've done all this here. Now, the reason why I say not saying it can't, because remember, we have completed a market maker buy model here, right? We have completed that, but we haven't completed this market maker buy model. And for this market maker buy model right here, all of this right here is just a stage of accumulation, right?
Gotcha. Yeah.
So looking at it in this sense right here, all of this right here, I'm looking at this as this is a first stage of accumulation right here, right? Looking at this right here is the smart money reversal. Looking at this right here is the low risk short. Low risk buy. And the reason why I'm looking at this is the low risk buy is because this buying opportunity here took out that high, right? That's our breaking structure right there. So you have your smart money reversal always happens below a low, right? It's always going to happen below a low. It can be an internal low or a higher time frame low, no matter what it is. You know what I'm saying? It's the smart money reversal is always going to happen below a low. Then when you get your low risk buy or low risk short, that's going to be the one that's like letting you know, okay, we leaving, we getting ready to go now. So once we come above that right there, now, right, this whole area here, we've just been kind of accumulating in this whole area, right? If you want to get super picky, you could try to break it down between here and there, but the algorithm trading all the way back down below this is showing you that it's treating all of this here as your area of accumulation, right? And right, you say, well, what are we accumulating? If we look here very closely, if this is where we traded up right there, right? And then I thought I can extend these to the, I guess they don't let you extend them to the left. I guess it'd be the other lines that you can extend to the left. Right? Yeah, see this right here. See that high right there, where we took that out right there, that high is lower than these highs right here. So that right there, that gives you, right, high probability, Jesus Christ, that gives you high probability relative equal highs that's been engineered on the top side of this accumulation right here, right? All of this accumulation right here, right? You got relative equal highs up here. So this high is lower than those highs over there, right? So you got these relative equal highs. You got this area of accumulation, right? Where we've come down and like swept this liquidity, right? So if price is truly bullish off of this move here and wants all-time new highs, right? You look to see if price comes back up above and takes out these relative equal highs, right? And if price come back up and take out these relative
Not
equal
yet.
highs.
She went to go get her car fixed.
Yeah, tell her get that car fixed, right? Back above there, and then that would be looking to complete that market maker buy model right there. All right. So right here, you're looking for, you don't want price digging all the way down into this right here, right? And then we can look in here and say, okay, what do we have over here? It's better to go like from top down, right? Let's go to the monthly chart, right? You always want to start from the top down, okay? So top down, we got monthly wick. Hold on here. We got a monthly discount wick November, right? Got a monthly wick there on our top down, right? So these are areas that we're looking to support price, right? From the higher time frame, we're looking for this to support price. Now we go down to a weekly, right? Looking at our weekly, right? What we got on the weekly, we've traded down into a weekly order block right here, right? So we've traded down into the weekly order block. The bodies are still staying inside of the bullish fair value gap, right? The bodies are staying inside the bullish fair value gap. We haven't reached the upper quadrant of the monthly wick, right? So we have the upper quadrant of the monthly wick right there. you'll be looking for a price to find some support there, because it's right there in line with this last down close candle of the order block. All right, looking at the order block, we also have mean threshold of the body itself close to consequent encroachment of the wick. But like I say, for the bullish narrative, you don't want to see price digging back down into this area right here. This is the balanced price range on the lower time frame. See all this back and forth delivery, back and right. We got a bunch of back and forth here, one solid down, one solid up, right? You don't want to see price digging back down into here, because on the lower time frame, that's that balanced price range. So you're looking for price to find support where it is now, that order block, that upper quadrant, right? Daily time frame, right? On the daily time frame, we do have excuse me, a suspension block here, right? We got a suspension block slash fair value gap there. All right. All right. Got a suspension block slash bullish fair value gap there, resting just below that quadrant there. We have a inversion fair value gap over here. All right. So we got an inversion fair value gap over here. Right there, that we just traded back down into also. I just noticed that now. I wasn't paying attention to that today. Right. But we just traded back down into that inversion fair value gap right there. We got an inversion fair value gap in line with the BISI right there. So you're looking for this to act as support, because like we said, all of this down, we're starting to touch that balanced price range there, right? But look how efficiently delivered all this is below that inversion fair value gap and that BISI. How efficiently delivered all this right here is, right? So you look for price to find support. We want to see discount sensitivity here, right? We want to see that discount sensitivity there to send price back up, because the higher time frame, because we're in a buy program on the higher time frame, right? When a buy program, well, like we said, this breaking structure on the daily was allowed because price was coming back down to a discount on the higher time frame, right? And so now, since we came here, right, since we came down there and got that breaking structure right there, right, and we got that breaking structure off of the reclaimed fair value gap, right? So we come down, get the breaking structure off the reclaimed fair value gap, and once we swept liquidity, we immediately came back up and created an inversion again. You see what I'm saying? So now we're coming back down, and you're looking for that support right there because the higher time frame is bullish. All right. Now, if we start to lose this area, right, then that's not good, because we lose this area. Yeah, we still got look like a suspension block there. Yes, we still got a suspension block here, right? We do got a huge suspension block there, but right, for the bullish narrative, low resistance bullish narrative, right, coming back down here. Let's just mark this out real quick. Let's see what it looked like on the higher time frame. Oh, I got the wick right there, so I could have used that. All right, so we got that suspension block there. I'm gonna make it a different color, so when we go to the high time frame, it'll kind of stand out a bit. Look a bit. I don't like that. Right. So looking at the monthly time frame, right, coming all the way back down into that suspension block is counterproductive for the bullish narrative, right? That's counterproductive for the bullish narrative, because we've retraced all the way back down, right? We came all excuse me, we came all the way back down to a weekly support area, right? came back down to a weekly support area, and then started to push back up. Had nice discount sensitivity, right? And then now for us to come all the way back down here, that ain't really low resistance. Again, we can, because we're just coming back to consequent encroachment of the monthly wick, but that ain't low resistance because we got support right here that should keep us up and send us back up to that high. All right. So like we always say,
even though that support is on a lower time frame than the monthly.
yeah, because the monthly already came down here and gave us
Down and
all this.
did it.
Yeah, we had all this discount sensitivity right there on the monthly. See, we came
Okay.
down because remember, we blew through that. We went through that a couple times on the daily. Remember on the
Yeah.
daily time frame, right? If you look here on the daily time frame here, right, when we created this, we came up, went down below it, then came back above it again. So we've went down below it, used it to go take out liquidity, and then now we're back on top of it again.
Gotcha.
You see what I'm saying? It's like like the PD rates don't go stale, but we came here, used it as an inversion to send us higher, right? Came here, used it as a reclaim to send us lower, and now we're back on top of it again.
It's an inversion. Gotcha.
You know what I'm saying? So now we're looking for this to act as support. And now that we look for it to act as support, it's right in line with new support here. This bullish order block right here, right? We came here, we created it, and now we're trading back to it, right? We're inside the wick of that order block right now, right? The low of the reclaimed fair value gap is the opening price of the bullish order block. Right? So that's why I say price can come down here if it want to, because that's your order block, right? That's your change in the state delivery. But when price is exceedingly bullish, we want to see it in the wick of that bullish order block, right? We want to see it come down here, find that sensitivity in that wick, and then push back up, right? And then we also got another order block that's right in line with this right here, right? Got a lot of confluence right there that we're looking for to support price. But what does that do? That give you an area to say, okay, we don't want to lose this, right? And we always want to remember what time frame we're looking at it on, right? And on the weekly time frame, we also just traded down into a weekly order block right there, right? We traded down. Yeah.
On that daily, do you consider that also a breaker, or do you see that area as a consolidation? Because we came down, we wicked higher and went back lower, or do you consider that trying to find a breaker in a consolidated area?
Where are you looking at for the break?
Back where
over here?
No, to the middle where we just came and swept lows. Yeah, that red, the down, we go back up, down.
Yeah, I'm just gonna say look for it, because I'm like, if you're looking over here, then I'll say yes, a breaker there, because we got that, you know what I'm saying? There's a breaker over there, right? But over here, right? It's nothing over here that would be a breaker right there.
Okay, so that even like that red come down, we go back up, even though we went with the so that green would not be a breaker, because like you said, that's looking for something in an area of consolidation, correct?
Talk about right here?
Yes.
Okay, like
because in the past I would have considered it a breaker, but
you could find a breaker. You probably could find a breaker here on like a lower time frame, something. You know what I'm saying? There probably would be a breaker inside there on a lower time frame, but for me, I'm not looking here for that to act as a breaker, because the move is here. You see what I'm saying? Like you're in the middle of the move here on this leg there. Like we're coming here. Once we get back up here, that would be the breaker there. You see what I'm saying? Because this is when price is flowing. Once we get up here, then now that's the breaker right there.
That makes sense. So like, on those higher time frames flowing, once that flow is over the top, so not in these consolidated kind of areas where the flow is not flowing, but when it's leaving away, that following that flow. Okay.
Yeah, we look for where the elephant stepping in the pool, like right, like cause right here you just going like I know a lot of people who look here, look and be like, oh, that's a breaker. See, I bought this breaker here and it went up. Nah, you got a first touch off this order block and it went up because that right there, that's not an ICT breaker. You just got lucky in that in that case. You see what I'm saying? Because like people be like, I got a low, high, lower, low, higher, high, right, and then whatever, like, cause it's not even a higher high by the time that trade down into it. But I'm not looking for a breaker in here because, like I say, if we come from here, you got a low, a high, a lower low, and if we come up here, make a higher high, that's your breaker there, right? And yeah, that's about it. Even right here, right? Even here, you got low, high, higher, right? You can look at that as a break if you want to buy off that, if you believe price was bullish there. But inside there, yeah, there's nothing in there to be looking for a breaker. Now, if you're looking at this right here on a lower time frame, you might be able to find something inside there on a lower time frame. Let's go to 60 minutes and see what that look like. Right, yeah, like right here, like this, right? So when I look here, right, you got that there, right? Then that'll be a breaker there, right? You got a breaker over here, then another breaker there. So you got two, you got a breaker there and a breaker there, right? In this area right there. Because when you look at it, right, price, spread it out so we can see it a little bit better, right? So price came here, made a high, came near, made a low, came near, made a higher high, right? That's your breaker right there. All right, for that time frame right there. And that's the same area that was on the daily time frame, right? And that's why I be telling people this daily counter here, right? When people be teaching, oh, you can, that's a breaker, you got low, high, lower, low. You're not teaching the breaker right. You're just getting lucky because this ain't the breaker right there, right? On the lower time frame, right? When you come to the lower time frame down here, this is the breaker here. That's a breaker right there because we had all of that movement there, right? So you buying that breaker right there and trading it back up, right? Makes sense.
Makes sense to me.
All right.
Yeah, makes sense. It's just like you said, getting caught in that consolidation, just look for the flow.
Yeah.
Okay.
What the receipt at? You ain't got no receipt? All right. My dinner is back. If you got questions, hold them to the next time. Appreciate y'all for hanging out with me, man. Hopefully y'all learned something, got something out of this. Hopefully, appreciate Deborah for asking the question. There's no such thing as this is just how you do it. Everything starts with a narrative, right? What's going on? What is price drawn toward? How is it going to get there? That's your narrative. You're building a narrative. You start from the top down, right? You look for signatures from the top down. Even when you get down to the lower time frame, you still look for signatures. Say, hey, how can I trust that this move is going to keep going? How can I, if one of the biggest things that you want to remember with order flow and price delivery, if price hasn't been delivered to a low or high, don't try to reverse the order flow, right? Don't try to reverse the order flow. And then when you see price trade into lows and highs, right? Once it get to lows and highs, is that low or high on the time frame that's holding the mic right now? Is that low or high the draw? Is that Picasso's house, or is that just a pit stop on the way to Picasso's house, right? If we're drawing toward, if we've swept daily buy side and we're drawn toward daily sell side, don't try to reverse price and take it back up at a 4-hour low. at an hourly low. If we haven't reached that daily sell side, just be patient and wait for an opportunity to sell. If we've rejected weekly buy side, if we ain't got back down to that weekly low yet, it don't matter if we don't get that during that week. Don't try to reverse price until we invalidate that sale program. You know what I'm saying? Let price form new structure. And once price forms new structure, now I'm looking at shorting in a premium of this new area. Now I ain't looking for it to come all the way back up here past this balanced price range, right? Just gotta remember, stacks on stacks on stacks on stacks. Tomorrow is the 13th. My baby graduating, so I will not be doing a smart money mentorship inside the smart money manuscript. We are pushing it to the 20th, I think it is, next Saturday. We pushing it to the 20th at 12 p.m. So we will not be doing the Q&A tomorrow. We will be doing it on the third Saturday this month because my baby graduating from college. Been a long time coming, right? Appreciate y'all for tapping in, man. Hopefully y'all learned something. If this is your first time tuning in to Tim's Tidbits, you probably not here no more. And if you still here, hey, man, I appreciate you. Hit the like button. Share this with somebody who might find some value in it. And until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we like to call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just me, Big Spot. If you don't hablo Espanol, y'all be safe. I hang these trading streets, man. Gone. Yeah.